Hey, everybody. I'm going to talk to you about chapter 3 of Dave Ramsey's book called The Total Money Makeover. I'm just going to go through and read the depth. This chapter is about, he talks about a lot of the myths that are associated with debt in our country or in the world. So he says, it is human nature to want it and want it now. It is also a sign of immaturity. Being willing to delay pleasure for a greater result is a sign of maturity. So he's talking about being able to delay gratification. Wanting something and wanting it now, he says, is a sign of immaturity. He says debt is a means to obtain the I want it's before we can really afford it. He says the financial and banking industries in particular are very good at teaching us their way of handling money, which of course leads us to buy their products. He says debt has been sold to us so aggressively, so loudly, and so often that to imagine living without debt requires myth busting. We have been sold debt with such repetition, with such fervor that most folks cannot conceive what it would be like to have no payments. He says, working with tens of thousands of people on their total money makeover in the last several years, I have found that a major barrier to winning is our view of debt. So he has what he does in the chapter is he puts a myth and then he puts the truth, what he feels is the truth. So myth number 1, debt is a tool and should be used to create prosperity. That's the myth. The truth that he says is debt adds considerable risk, most often doesn't bring prosperity, and isn't used by wealthy people nearly as much as we are led to believe. He says myth versus truth. Playing the lotto and other forms of gambling will make you rich. Truth. Lotto and Powerball are attacks on the poor and people who can't do math. He says there is no shortcut to any place worth going. Okay, so myth number 2. If I loan money to friends or relatives, I am helping them. Here's the truth. If I loan money to a friend or relative, the relationship will be strained or destroyed. The only relationship that would be enhanced is the kind resulting from one party being the master and the other party being a servant. So he definitely expressed his thoughts about not loaning friends or relatives money unless you really have it. Just give it to them, because a lot of times it doesn't get paid back and it causes problems. Myth number 3. By co-signing a loan, I am helping a friend or a relative. Here's what he says is the truth to him. Be ready to repay the loan. The bank wants a co-signer for a reason, which is that they don't expect the friend or relative to pay. He says we continue to believe the myth that a loan to a loved one is a blessing. He says the sad thing is that those of us who have co-signed loans know how they end up. We end up paying them, but only after our credit is damaged or ruined. Okay, the next myth. Myth. Cash advance, payday loans, rent to own, title pawning, and tote the note car lots are needed to help lower income people get ahead. Here's what he says is the truth according to him. These rip-off examples of predatory lending are designed to take advantage of lower income people and benefit only the owners of the companies making the loans. He says lower income people will remain at the bottom of the socioeconomic ladder if they continue to fall for these ripoffs. Okay, next one. Myth. 90 days same as cash equals using other people's money for free. Here he says the truth is 90 days is not the same as cash. He says the silly marketing that America falls for has resulted in this. We buy things that we don't need with money we don't have in order to impress people we don't like. He says if you can't get a discount, go to the competitor and get one. You do not get the discount when you sign up for the finance plan. Dave rants. He has something called Dave rants in here. Whole life insurance is a horrible product. Why would you pay someone interest on your own savings? That's backward and it does not make you smart. Okay, next one. Myth. Car payments are a way of life. You'll always have one. Truth, according to Dave. Staying away from car payments by driving reliable used cars is what the average millionaire does. That is how he or she becomes a millionaire. He says taking on a car payment is one of the dumbest things people do to destroy their chances of building wealth. The car payment is most folks' largest payment except for their home mortgage, so it steals more money from the income than virtually anything else. Myth. Leasing a car is what sophisticated people do. You should lease things that go down in value and take the tax advantage. Here's what he says is the truth according to him. Consumer advocates, noted experts, and a good calculator will confirm that the car lease is the most expensive way to operate a vehicle. Myth. You can get a good deal on a car at 0% interest. Here's what he says is the truth according to him. A new car loses 60% of its value in the first four years. That isn't 0%. A good used car that is less than 3 years old is as reliable or more reliable than a new car. The average millionaire drives a 2-year-old car with no payments. The average millionaire is unwilling to take the loss that a new car dishes out. That is how they become millionaires. Myth. You should get a credit card to build your credit. Here's what he says is the truth according to him. You won't use credit with your Total Money Makeover, except maybe for a mortgage, and you don't need a credit card for that. The best myth is the build your credit myth. Bankers, car dealers, and unknowledgeable mortgage lenders have told America for years to build your credit. Those of us who have used a Total Money Makeover have found that cash buys stuff better than debt. Myth. You need a credit card to rent a car, check into a hotel, or buy online. Here's what he says is the truth according to him. A debit card will do all of that. Myth. The debit card has more risk than a credit card. Truth. No, it doesn't. The perception is that it's riskier to conduct that kind of business with a debit card. Suppose financial experts have spread this myth to the point that it is virtually urban legend. The fact is, Visa's regulations require the member bank to afford the debit card the exact same protections in case of theft or fraud. Myth. If you pay off your credit card every month, you get the free use of someone else's money. Here's the truth according to Dave. Card Track says that 60% of people don't pay off their credit cards every month. As I said, when you play with snakes, expect to get bitten. Myth. Make sure your teenager gets a credit card so he or she will learn to be responsible with money. Truth according to Dave. Getting a credit card for your teenager is an excellent way to teach him or her to be financially irresponsible. That's why teens are now the #1 target of credit card companies. Myth. Debt consolidation saves interest, and you have one smaller payment. Here's the truth according to Dave. Debt consolidation is dangerous because you treat only the symptom. Myth. Borrowing 125% of my home is wise because I'll restructure my debt. Truth. He says you are stuck in the house, which is really dumb. Here's another myth. If no one used debt, our economy would collapse. Here's what he says is the truth according to him. Nope, it would prosper. He says, my dream is to get as many Americans as possible out of debt with a total money makeover. He says, what if every single American stopped using debt of any kind in 1 year? What would happen? He says they would save and they would spend, not support banks. Spending by debt-free people would support and prosper the economy. The economy would be much more stable without the tidal waves caused by consumer confidence of the lack thereof. He says debt is not a tool in the last part of his chapter. Debt is not a tool. It is a method to make banks wealthy, not you. Are you beginning to understand that debt is not a tool? This myth and all its little sub-myths have been spread far and wide. Always keep in mind the idea that if you tell a lie often enough, loud enough, and long enough, the myth becomes accepted as a fact. Your largest wealth-building asset is your income. When you tie up your income, you lose. When you invest your income, you become wealthy and can do anything you want. Your income is your greatest wealth-building tool, not debt. Your total money makeover begins with a permanently changed view of the debt myths. So this is Dave Ramsey's book, The Total Money Makeover. This is chapter 3, and he's talking about debt. And he gives a debt, and then he gives a debt myth, and then he tells what he feels is the truth. So if you want to read more into it, you can get the book and check more into it. But that was chapter 3. Thanks.